Hello everyone, I'm here back again with a new video. I hope everybody's liking my videos. Please subscribe to my channel and like the videos if you think they are really informative and they are helping you in your trading journey. Today, I would like to talk about the US dollar index. What the US dollar index is, how it works, what is the impact on the impact on the SPX, SPY, and other indexes or the overall market in the US, uh, and then how the value of that US dollar index is derived, and what is it that you can uh, think of during the trading strategies, right? So the US dollar index depends on six currencies I mentioned below: Euro, GBP, JPY, SEK, CHF, CAD. You can consider, uh, as we know, there is a forex aspect to the trade, right? So let's say there is always a currency rate between USD and Euro, and similarly with the other six currencies. These areas or geographies are like the Europe, Great Britain, Japan, Sweden, Canada, and Switzerland. These are six of the geographies or countries with which United States mostly deals with. There is an import and export of the products which happens, or there is a exchange of services that happens between the US and these countries, which determines the value of the US dollar index. So if you ask me, we can think of it as a bucket of six currencies mentioned here, and we will need to do a geometric mean of the value of the USD with respect to each of the currencies with the weightage I have given here. So this is the weight that each of the currency uh, carries in the US dollar, which means that Euro currency will impact the US dollar index the most, and then GBP, JPY, SEK, and so forth. Because if the weightage of that currency in the US dollar index is high, the US dollar index will be impacted the most by the currency which is the highest weightage, if you agree, right? Now, why does it matter for all of us? Why should we even look at the US dollar index? As a retail trader, if we are new, we don't know. There are several factors impacting the US stock markets. You have uh, the T-bills or T-notes, 20-year, 30-year interest rate. You have the inflation rate, you have the job data, the inflation data that is coming out. You have the Fed decisions that are going to be there, and you have the dollar index values. You also have the Bitcoin, right? So several of these factors are impacting the US stocks. And I would say that just looking at the stocks that you want to buy or sell is not sufficient. We should do a proper analysis. We should have that 36,000 holistic view of the overall market and what factors are impacting it. That will give you maybe an effective trading strategy, right? So what do we see during the time? I think I will go back to the Thinkorswim platform. And if you see, this is the Thinkorswim platform I'm sharing. On the left side, DXY is the symbol, dollar DXY for the dollar index. On the right side, you have SPY. In a layman terms, if I want to tell all of you the value of the dollar index and the US stock market indexes, it works inverse. So if the US dollar index rises, the markets will fall. If the US dollar index falls, the markets will rise. This is the inverse relationship between the two. What is the reason behind that? As I mentioned, during some uncertainties or the time period when most of the fund managers or hedge funds or big institutional funds, if they start withdrawing their investments from the US stocks, which means that they will start selling their portfolio, they will convert it into cash, which means that the markets will come down and the dollar index value will rise, right? So you can think in that way why it works inverse. But what we need to know is, during the days when the dollar index is in the uptrend, do not expect SPX, SPY, or the indexes to go up, and vice versa. If you look at the charts, and on the left side, I have the stochastic flow for both. So the flow for dollar index recently on a daily chart, it tells me that the red line it crossed above the purple line, which is a signal that this dollar index is going to high in the upcoming weeks. Similarly, for the markets, this is SPY is the ETF for our mother index. You see the stochastic flow shows me that the markets are going to come down. So it also signifies that when the dollar index starts rising, the markets are ready to fall. And for the last few years, you will also see there is a downtrend in the US dollar index. Uh, the dollar index was at highs around October 2022, maybe a year back. And since then, it started falling and it made its lows on 14th of July uh, this year. And on the same time frame, you will see the stock markets were rising when the dollar index was falling. The markets were rising, and then now when the dollar index started rising, the stock markets, the SPY and SPX and all the indexes started falling, right? So what we can conclude from here is looking at the dollar index, there is an inverse relationship. If you hear in the morning when the market opens that the index is rising, uh, expect the markets to fall or at least not rise, maybe trade in a certain range, because then because of whatever I discussed in this video. So you are able to probably take effective decisions. Don't go long, don't be bullish when the dollar index is rising, and vice versa. Thank you for watching my videos. I hope I'm making your trading journey a success. If you think these are informational and like my videos, please subscribe to my channel. Have a great day.